Okay, welcome back, you guys, to another OPF Quick Bite, and I'm kind of changing things up here. Recently, you can see on my screen, I wrote an article about high probability option trading strategies. And the article, if you read it, I'll leave a link down below to the article, but if you read it, you can clearly tell that my opinion is biased. And I was thinking about it last night, and then I read another article a guy wrote from a website that I belong to, and it had to do with high probability options trading, and he had a whole strategy. And I'm like, in theory, everything looks great. The article doesn't, if you read the article and go through it, everything in the article is true when you do these types of strategies based on what I showed you in the article. Those risks are inherently true. There's no doubt about it. And sometimes I think in theory, a person's plan may not work out. But as my mentor taught me, theory is just that, it's theory. So the only way to truly know how things are going to work out is to put it into a practical application. So that is what I am going to do. Each week, I will record a short snippet video, and I encourage you guys, you can follow along. Each week, I'm going to place a couple different trades. Behind the scenes, I'm going to place the trades that I've been taught to place, and on screen, I'm going to trade the high probability trades. Now, there's a reason why behind the screen I'm going to trade my trades, and that's because these are strategies that are taught to members of the Success Academy, and if you want to learn those strategies, then you need to join the Success Academy. I'm not going to give you that. That information is not mine to give to you for free, and to be honest with you, my mentor used to give that information away for free, and no one ever utilized it. So it just translated into paid courses, good paid courses, have successful results. So anyway, that's what I'm going to do. They'll be quick. I'll show you, I'll place the trade. I encourage you to get into it's a paper trade, okay? So all the same rules apply as what I was talking about, what I talk about in the beginning of every video. This is for educational purposes only. And this is going to be a long series of trades. But what I thought of, instead of doing a monthly, because I don't do short-term trading except for my cover calls. Everything else is fairly long-term trading. So I didn't want to do monthly trades, because to really truly go through a high probability option trading strategy, I need to do that over the course of at least 18 months to 2 years. And just because of the way high probability trading works, right? So I'm going to do weeklies and see if that, that will accelerate the overall process. But don't just jump to the conclusion that if you do a weekly, you'll make more money than if you do a monthly, and vice versa. You really need to get into the weeds of doing it, and you'll find that that's not entirely true. So, all right, so that's the reason for this quick bite and how I'm going to do these. I will still do the other quick bites that I do, but I wanted to do this case study, and hopefully you guys will follow along. So let's get started with the case study. Okay, so here are the rules we are going to have. Let me bring this over. So here's what we're going to be doing. And here is going to be, we're going to use Tesla, okay, because Tesla seems to be the hot stock of choice. Now, in the behind the scenes, I'm not going to use Tesla. I'm going to use my favorite, SPY. But that doesn't matter. In the high probability trades, we're going to use Tesla. We're going to sell put options at a weekly time frame, and I'm also going to do monthlies. So we'll see more results come out from the weeklies quicker, obviously, but I'm going to do the monthlies as well because I want to compare the two. and we'll see how these things pan out. Now there's rules, and these are rules that I will not violate, and if you're following along, don't violate them. So first thing, we're going to sell an out-of-the-money put and spread with at least a 90% probability. Now, I'll show you that when we get to it. We're going to manage the trade. So we're going to close it out at either a 50% loss, or if it's in the money, we are going to avoid assignment at all costs. Now with spreads, we can take a little bit more latitude because we have protection, but with the puts, we have no protection. We're not gonna take assignment here. If we are assigned though, because it can happen at any time, we will not keep the stock. I've seen other strategies where they say we'll keep the stock and then we'll sell it once it recovers. Well, what if it never recovers? It's just not a good strategy in my opinion. So we're not going to do that in this test. Instead, we're going to sell for the loss and roll another put out far enough to recoup the loss. Now, I'll be honest, I've never done that. So in the way I trade, I don't typically do this. So we'll see how that works. It'll be new for all of us. If you've done it, leave me a comment and tell me how you've done it, how the results work out. But if it happens, we'll see what transpires. But we're going to try to avoid assignment at all costs. And again, like I said, I'm going to place behind the scenes trades. So let's just go ahead and get started. So 7 days out, I got Tesla. So basically, you're going to change your layout here to implied volatility, probability out of the money, blah, blah, blah. And we're going to look for the 90% right here, okay? And we are going to sell this put. So that's a 7 day. Let's go, you know what? I'm in the wrong account. Let me go to my IRA account. Hopefully it works this way. I think it will. So let's go ahead and sell this one. Give you a little tip there. Go to the mid. Okay, so just to give you an idea, this is kind of what I was talking in my article. We are risking having to invest $47,660 in this stock to make $340. Okay, so trying to be non-biased here. I'm biased towards this because of that risk, but let's just go ahead and place it. So let me send it off. So let me change some things. That's what I was afraid of. So I may have to do this in my margin. Let's go to the margin. Let's go back and let's try it again. Yeah, this one will work. Okay. So let's send that off and it filled. Okay, so now what you gotta do to do a spread, you've gotta look at the singles first to know where your probabilities, because once you switch to spreads, it's not gonna show. So we know it's the 480, right? So let's go to a vertical. Look for the 480, 475, 480. Now we got about 340, so we can try and match that. See if 10 should do it. Yep, it's close enough. So you can see the difference. See, this is why I like spreads better than puts. We can get the same revenue, fraction of what we will spend, or risk, I should say. And of course, spreads do this. They tend to do this. So we'll just, let me change it down to the mid price here of 35. Or you know what? I'll keep it at 34 because that almost ensures. And then we're right on the money with that. That will almost always kind of flip it and sell it. While we're waiting, let's just go to a monthly. So let's just go, I want to go to an actual monthly, not a, so we'll do the single. I should be able to do the same thing. Again, focusing, it should be around the, what did we say, the 380, was that it? Okay, so the other one placed. Sorry, let me look over here real quick. 480. Oh, okay, the 480, but now we're on the monthly, so you can see that it's changed. So let's go to this one here. That's the 372. So we're going to sell that put at the mid price. Okay. Let's go ahead and send that off. That filled, and then the 372 is what we did, so we're going to switch to our verticals and do the same thing. 372, so this is 370, 372, so we're going to need to look for, shoot, what was our revenue on that one? $500, so we'll do the same. So we're going to be selling a lot of contracts here. So this will be, I think, 25 would do it. Let's see. Oh, I gotta do more. That was at 3. Let's try 30. Good Lord. It's at 360. 35. There we go. Okay. Show that at the mid. Okay. Confirm and send. Okay. Send that one off. Okay. So let's see. Where's it at? It's right on the mark. So we'll give it a little bit and see if it places. And then we will, and it's already in this. So here's something that you will tend to see. I'll give you a little tip, especially when you start to trade bigger contracts or more and more contracts, you'll tend to see this where sometimes these numbers will start dropping or the market maker will start dropping. Now, I won't drop 5 cents to come to their mark here. I'll just let this sit for a little bit. And there you go, it filled. Give it time, have some patience, it will fill. Now the paper trading platforms tend to be a little different than the real money platforms, but you tend to see, you can see this on the real money platform, especially when you start trading bigger dollar figures. So just give it some time. You can adjust it by a few pennies here and there, but don't just automatically give the broker what he wants, okay? So. All right, so that's it. I will do my trades behind the scenes, and then we'll see you in next week's video to track everything. All right, so hope you guys enjoyed it. Remember, if you like the video, give it a thumbs up. Comment below if you've done this strategy or you have any comments. And if you haven't already subscribed to the YouTube channel, subscribe to the YouTube channel. See you guys next week. Take care.